Hello everyone. This is another question on ratio analysis. These are the information given. We have to find out current liability, current assets, stock, gross profit and sale. So first information is given. Current ratio is 2.5. Now what is the formula for calculating current ratio? Current ratio is equal to current assets. We can denote it current asset upon current liability, that we can denote CL, that is equal to 2.5, that we can CA upon CL is equal to 2.5. If we cross multiply, we can write current asset is equal to 2.5 CL. Cross multiply. Now next information, according to the question, it is given working capital. Working capital, the difference between working capital and capital is capital, it is the initial investment made by the proprietor or owner of the business, but working capital, it is the capital required to run the day-to-day operations of the business. So working capital is the difference between current asset and current liability. So according to the question, working capital is given, that is equal to rupees 90,000. So here we write working capital is equal to rupees 90,000. So we know the formula working capital. So working capital is equal to current asset minus current liability. So we know the answer of working capital, that is 90,000 is equal to current asset minus current liability. According to this, we can substitute in current asset, that is equal to 2.5 CL minus CL, because here it is current asset is equal to 2.5 CL. Here we write current asset is equal to 2.5 CL minus CL. So 90,000 is equal to 2.5 CL minus CL. From this, 90,000 is equal to 1.5 CL. So CL is equal to 90,000 upon 1.5, that is equal to 60,000. So CL here means current liability. Current liability. And current asset is equal to, according to this, we have framed a formula. Current asset is equal to 2.5 CL. So we write it here, current asset is equal to 2.5 CL, that is equal to 2.5 multiplied by CL, that is 60,000 into 60,000, that is equal to 1,50,000. So current asset is 1,50,000, current liability is equal to 60,000. Next information is given liquid ratio. Next one, liquid ratio, it is also known as asset test ratio, or it is also known as quick ratio, that is equal to 1.5 is given. So what is the formula for liquid ratio? That is equal to liquid assets upon current liability, that is equal to 1.5. So we know the value of current liability, we can substitute here. So we can denote liquid asset with LA. So LA upon, what is the value of current liability? Already we have calculated current liability is equal to 60,000. That is equal to 1.5. If we cross multiply this, liquid asset is equal to 1.5 multiplied by 60,000, that is equal to 90,000. This is the value liquid asset. Now, what is the formula for calculating liquid asset? Liquid asset is equal to current asset minus stock. Normally we deduct stock and prepaid expenses, but in this question there is no information related to prepaid expenses, so we deduct stock. So we assume it stock is the liquid asset according to this question. So we know the value of liquid asset already we have calculated. Liquid asset is equal to 90,000. 90,000 is equal to, we have already calculated current asset, that is 1,50,000 minus stock. From this we can calculate the value of stock, that is equal to 1,50,000 minus 90,000, that is equal to 60,000. And next we have to calculate gross profit. Next information is given stock turnover ratio. Stock turnover ratio, in bracket it is given cost of sale upon closing stock. In between any equation, slash a oblique or two word, if it is written there, then it means divide by. So stock turnover ratio, that is equal to stock turnover ratio, that is equal to 6 is given in the question. According to the question, it is also written in the question. It is stock turnover ratio, in bracket it is cost of sale upon closing stock. So we can write it here, cost of sale upon closing stock, that is equal to 6. Now cost of sale, it is the other name of cost of goods sold. So according to this formula, we don't know cost of sale. We know the value of stock, that is closing stock, that we have already calculated. Stock is equal to 60,000. So we write it here 60,000, that is equal to 6. Now we cross multiply and calculate the value of cost of sale. Cost of sale is equal to 6 into 60,000, that is equal to 3,60,000. Now what is the formula for calculating cost of sale? Cost of sale, it is also known as cost of goods sold, that is equal to sales minus gross profit. But we don't know sale, we don't know gross profit. But according to the question, gross profit ratio is given 20%. So gross profit ratio is equal to 20%, means 20 upon 100. So GP, gross profit upon sales, is equal to 20 upon 100. This 20 upon 100 we can write it here 1 upon 5. So GP upon sales is equal to 1 upon 5. If we cross multiply, we can write sales is equal to 5 GP. Cross multiply, sales is equal to 5 GP. Now in this formula we can substitute. We know the value of cost of goods sold. It is also known as cost of sale. We have calculated cost of goods sold here, cost of sale, that is equal to cost of sale is 3,60,000. So we can write it here 3,60,000 is equal to, we don't know sale, but we can write it here, sales is equal to 5 GP. So we can write 5 GP minus GP. We are substituting in this formula. Say instead of sale we are writing 5 GP. GP already is here, there we can write GP. So continue with this. 3,60,000 is equal to 5 GP minus GP, so that is equal to 4 GP. 3,60,000 is equal to 4 GP. GP is equal to 3,60,000 upon 4, that is equal to 90,000. But according to the question we have to calculate sale. So we already framed the formula, sales is equal to, according to this, 5 GP. Sales is equal to 5 GP. We know the value of GP already, we have calculated 90,000, that is equal to 5 multiplied by 90,000, that is equal to rupees 4,50,000. This is the last part of the question. Means we have calculated current liability, current asset, stock, gross profit, sale. Thanks for watching the video.